Good morning, everybody. It is April 12th, 2019, and we are going to talk about stuff, all kinds of stuff. I have finally gotten fundamental trends up and running, and it is nice. This is going to be what the chat room looks like. I know people have been excited about that. So the first rule of the chat room is to keep it light and respectful. So, use the little Fight Club stuff there. Let's see, I think it should be, there we go. The first rule of chat room is to keep it light and respectful. And just a little talk about how to use it. And we'll go back to this in just a second. For those who are watching before I started the video, I just made some trades in Newmont Mining. And I'm going to talk a little bit about gold today because I know that some people are starting to get gold buggy. Well, I have been a gold bear for quite a long time, since about GLD. Oops, that's wrong. GLD. So I'm actually going to go back further. Back around 2000, I was buying gold, and I rode it up pretty high, and around $1,600 an ounce. I told everybody to start getting out because this started to happen. And I remember being at a poker game at a place called Jimmy K's, and two people cornered me and said, "Hey, what do you think about getting into gold?" Right here where I was selling. And I said, I think that it's a really good time to get out of gold. And they said, "Why? It's going up." I said, "Yeah, it's been going up for like a decade." And they didn't like that answer. So they bought gold that week, and the next week they came into poker, or 2 weeks later or something like that. They said, "Gold is up to like $1,800 an ounce. I made $200 an ounce already in a couple of weeks." I said, "You sure did. You should probably sell it." "No way, man. It's going to 5,000. I was like, I think it's going to about 11 or 1,200. "No way. It's just going to keep going up." And So about 2 years ago, when it got down to right around 1065, right? 1065, right in there. I started sniffing around right in there. And I did a little trade, and I haven't been back since. I did not do this trade, but I'm looking at gold here. And what's going on in the gold market is that there's massive consolidation. During this whole period, the big miners have been consolidating their balance sheets. They've been consolidating with each other. They've been focused on profitability over growth. And the junior miners got waxed, just crushed. So if we take a look at companies like Barrick Gold, we take a look at Newmont Mining, and we take a look at Core Mining, which is one of the other stocks that I'm in, we will see that everything's done bad. Gold did a little better, but the shares of the stocks have just cratered. Core down 91%, and I'm buying it. So when I was telling people to sell over here because it was going up, then all of a sudden I'm buying Core Mining here the last, in that 5-ish range for, I don't know, I think since last fall, late last fall. People said I'm nuts about that too. But Core Mining is a whole different type of company now than it was way back here. Whole different company, different assets, different balance sheet, different management, different focus. And that's the same for Newmont and Barrick and all the other ones, right? Newmont and Barrick are the two, biggest companies out there now because of the mergers that they went through with Gold Corp and whoever else it was. And I'm liking Newmont Gold Corp right here. And I think I'm going to be liking Barrick right here because Barrick and Newmont did a deal with their Nevada mines that's unlocking a whole lot of value. It's Randgold. I knew it was gold, something gold. And that's basically, they're acting like an oligopoly. We've talked about oligopolies before, right? As investors, we like oligopolies because that controls the prices and the production. Think about OPEC, how successful they've been for decades and decades controlling oil. They've ran into some problems lately, but they're reasserting themselves, at least for a moment. Saudi Arabia is really the one asserting itself. And oligopolies, whether it is fertilizer, we're in Nutrien, right? Nutrien is the merger of potash, and I forget who they merged with too, Agrium. And now you have markets that are controlled by oligopolies, and that's driving prices up over time because they're controlling the supply when we know that demand is slowly going up. It's not fast. Demand's not going up fast for oil or fertilizer or for gold, but it's still going up just a little bit. Fertilizer, the demand's probably going to increase the most, which is why I love Nutrien. Pays a big fat dividend, probably going to get year-over-year growth in the double digits by the next year or two. Great balance sheet. They've just done some neat things. They were smart enough to sell lithium at the top because they owned a big lithium mine, Nutrien did, and they sold SQM, their 30% share. And what did we find out less than a year later, which I bet they kind of knew about, is there's going to be a replacement for lithium in batteries. Wow. Bet we're going to buy a mining company that mines that particular metal soon, aren't we? So we'll talk about that again in the future, but I want to get us situated because some of those mining stocks are going to come to us. The mining stock that I was buying this morning, though, is Newmont. And the reason I bought Newmont is because if you're a shareholder by Tuesday, I think it's Tuesday, it might be Wednesday, but I wouldn't wait. They're going to pay out a special dividend. So if you buy the shares now, you get that special dividend. But wait, there's more. What I did is I bought the stock at 36 and change. I think 36.15 and 36.20 is what I got it for. Let's see where it is now. Yeah, 36.15 and 36.20 is what I got it for because they're going to pay a special dividend. But I'm not super bullish on the stock yet, so I turned around and immediately sold a covered call. I got over $4, $4.45 and $4.50 for the June, right? What was that? The June 32 covered call. Well, gee whiz, why would I sell a $32 covered call on a stock I just bought for $36.20? Well, first off, it's a risk management thing. When the dividend gets paid out, the share price will drop, right? That's how dividends work. They come out of the share price. So if this little rally here is some hopium, and we know that support is right around 32 and a little bit lower, and we do know that, look, bounce, 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 right? So I sold the $32 covered call, got $4.45. So I'm going to get the spread between the stock price and 32, which is 20-30 cents, plus the special dividend if the stock gets called away from me. But what if between now and June, stock price dips below 32? I think that could happen. I think that the stock has run up a bit. I think the market's going to be choppy, and I want to be able to collect that premium. So in the worst case scenario, over the next couple of months, I collect the dividend, special dividend, and I collect that 20-30 cents difference if the stock in fact gets called away from me at 32. But the kicker is that it might not get called away from me, in which case my net cost is still below 32. So I'm looking to accumulate some shares in Newmont because I think that Barrick and Newmont and some of the juniors are going to go up over time. Now, I don't like GLD. Here's why I don't like GLD. Because GLD, which is just gold proper, and there's a couple others similar funds that are similar to it, could go up 20 or 30%. Big deal. Look at the moves that these stocks have made over time. Okay. Some huge moves. If the price of gold goes up to 15, 16, 17, 1800 in the next few years, because of the way that they've consolidated this market, cut their expenses, focused on the best assets, their margins increase more than the increase in the price of gold, because their cost of production is around $1,000 an ounce. It might be a little lower. And as the price of gold goes from 1,200 to 1,300 to 1,400 to 1,500, it all just drops to the bottom line, right? So that is more leverage. These guys are more leveraged to the price of gold than gold is. Think that through. Same thing happens in oil. So you actually want to be with the best producers. I like Newmont, I like Barrick, and I like this little Core Mining company. I've been selling cash secured puts on Core Mining, the $4 puts, and I've been buying some leaps because I think that if we get a rally in gold, we're going to do pretty good. Now, be careful with the leaps, because helicopter money and quantitative easing and everything might not come soon. However, what do we know about the Fed? The Fed is talking about ending quantitative tightening by September. I think if there's a hiccup in the economy in the next 4 months, they might end it in July, maybe June, who knows. But quantitative tightening is probably over by September, and that's going to release another $50 billion back into the economy every month, mainly going to the big banks who find ways to get it into assets usually. I mean, it'd be nice if they would invest mainly in new companies and stuff like that, but it'll end up finding its way just into the stock market and bond market rather than startups and loans. I'd rather see it go to loans to those companies in your industrial parks or other corporations that want to expand, but generally it finds its way into securities. I think the number I read was like 80% of that money finds its way into securities. It's, you know, the Wall Street casino. That's how it is. So I am, for the first time in a long time, getting bullish on gold. Now, Avi Gilbert's bullish on gold. You know that I'm over at FA Trader, throwing a couple pieces up there every week on their cheap service. I really do think that you probably ought to have FA Trader as an add-on. I put the links in the chat at the very top to the article that I wrote, to this article, Amazon versus Microsoft and Tesla versus the world. And then I have the discount code also in the chat room. So I will put those in the comments of the webinar as well. Now, let's move away from gold. No, I'm not a big fan of GDX. Somebody asked about GDX. Nope, I'd rather just buy these three. This is my basket. My basket is Barrick, Newmont, and Core Mining. It's the two big players, the ones that control the oligopoly, and Core Mining, which I know pretty darn well at this point, and I like the company because of what I know about them. And there's going to be one or two other miners I add that will probably have some gold, but also a couple of industrial metals that I like. And I'm waiting for the pullback in the economy before I buy those, because I want to buy them down low. Let's switch over to Freeport-McMoRan just a second, which is not the company. Oops. Probably not the company I'm going to buy. Excuse me, it might be though. Freeport-McMoRan. So I bought Freeport-McMoRan way back in here. Rolled it all the way up here. My dad owned some. Sold it. He sold it before I did. Sold it up here. It crashed, and I was real lucky. I bought it within days of its bottom. So I bought again down here, and I rode it all the way up to about here, and I sold, and I haven't been back since. You know, there was one more rally I could have got into, and I didn't understand it, so I didn't do it, right? If you don't understand it, if you don't understand why it would happen and what the probabilities are, you're just gambling. Now, if I had gambled here, I would have won, right? Because I would have got that rally. You know, I would have got out before it crashed all the way back down. But this right here is a hard trade. I don't usually get in on those because sometimes this trade, instead of going like that, does this. Blam! You know, I don't want any part of that. So, I'm not looking at Freeport-McMoRan too seriously because they're not focused on the metal I really want, although copper is looking semi-exciting a few years out because that market is also tightening up. And what we are learning about commodities in general, right, and is a lesson that we should have learned in the past, but the lesson is lost because people just weren't alive back then. But when you have these long capital investment cycles, potash, for example, potash got overinvested about 6 or 7 years ago, and potash has been in the trash ever since. Well, in the last year or two, that started to change. The companies that are heavy in potash, which is Nutrien and a couple Russian and Ukrainian companies, Mosaic, they haven't been investing as much in potash. And then BHP Billiton, which was going to do a giant potash mine up in Canada, decided not to. So for several years now, there's really been very little investment in new potash. Inventories went away, demand's drifting up, supply is drifting down, and now all of a sudden you've got pricing power in potash again. Same thing is happening in oil. We talked about this a few years ago. The deep water drillers have not gotten new investment. You know, everybody says, oh, deep water drilling's coming back. It's not. Why? Because the end of the oil age is upon us. We're already in the second inning. You know, this isn't batting practice anymore. The end of the oil age has started. And by the end of the 2020s, probably, you're going to see more EVs being sold than internal combustion engine cars. And by the 2030s, internal engine combustion cars are going to fall off a cliff because China, India, California, a lot of big economies are going to ban them or already have. So we know we're at the end of the oil age, probably second inning, give or take, maybe first, maybe third, who knows. But, you know, first third of the end of the oil age. And that means that the gigantic mega projects that produce a ton of oil, nobody's investing in them. Why? Final investment decisions aren't coming in favorable. They're shelving them. Why? Because if it takes them 8, 9, 10, 11, 12 years to get $1 billion back, right? That first barrel of oil doesn't really cost $40 at the margin. It's $40 a barrel at the margin is what they're paying for that barrel. And then if they get 60, that's a $20 towards the $1 billion that they just spent. That's an awful lot of barrels before you pay off $1 billion or $1.5 billion, isn't it? So the cheaper projects, you know, your $100 million jobbies, $200 million jobbies, are still getting done, not a ton of them. And there's even some cheaper projects, real small stuff. But the the non-deep water, right? The shallower water and the kind of the medium depth water, they found most of that oil, right? So they got to go deeper and deeper to get more, and that's more expensive and it's more risky, and there's a lot more opposition from government and from environmentalists. So, you know, oil's going to keep drifting up, and we'll see what interesting stuff happens in May when President Trump, and it's going to be actually any day now, President Trump decides whether or not the 5 countries that still have waivers to the Iran sanctions get to keep those waivers. I think that the waivers are going to go away. Here's why. Saudi Arabia literally has President Trump over a barrel because they've cut their production so much, way more than anybody thought. The amount of oil going to China and India is 9 million barrels per month. 9 million barrels a month. You know, it's nothing. 300,000 barrels a day. There's about 1 million barrels a day total on Iran's sanction on the waivers right now. If they enforce those waivers and get rid of the 1 million barrels a day, Saudi Arabia can replace that overnight. You hear that? Overnight, snap of a finger. Right? They just reduced their oil from 11.3 million barrels a day down to 9.4 million barrels a day from last fall to now. Take nothing for them to get back up to 10.5 million barrels a day or even 11 million barrels a day. They can replace all the oil that would the waivers would be getting rid of. So we'll see how that plays out. That will be a topic next week. We're going to talk about oil more in depth because I want to see what President Trump has to say, and I'm going to fire out an article about that. In any case, people are asking about some other gold plays. No, I don't like the streaming companies. Don't like the streaming companies. They're not really paying dividends. Dividends are teeny tiny. I'm not interested in them. Price of gold is not going to go up that much. It's not going to be some big spike thing. People misunderstand how currency works. You know, the people that chant fiat currency, fiat currency, fiat currency, they've been fiat wrong for a long time, and they're going to be fiat wrong forever because the dollar is going to get stronger, not weaker, and gold is going to get more expensive because of supply and demand. And sure, maybe there'll be a panic, but people are buying Bitcoin now and EOS and things like that. And I do have 2 crypto experts lined up now. So we will start doing the interviews very soon. All right, let's move on to an article I wrote over at FA Trader. I mainly wrote this article because I have a client that was an early investor with Larry Ellison. And we know that Amazon and Microsoft are fighting over the Pentagon contract. And Larry Ellison, who was in on trying to get that deal for Oracle, filed a lawsuit back in December claiming that there was, malfeasance going on, conflicts of interest, and he was right. There was an employee there who was was shady, and they got rid of him. I think he's going to jail. But in any case, it's between Microsoft and Amazon now. Beth wrote an article about that. She's another one over at FA Trader. And I just thought it was interesting that Larry Ellison was on the edge of something shady again, even though it's not him, but he fought back, and I think that's interesting now that he's a member of the board of directors of Tesla. So in this article, trying to be a little bit funny, Larry Ellison and Tesla, a match made in purgatory. I think that the killer instinct that Larry Ellison brings reinforces the killer instinct that Elon Musk has. And we're going to talk about Tesla today because the Tesla bears, particularly the going to zero crowd, they're nuts. They're just out of their minds. They don't know what they're talking about. They don't understand how business works. They don't understand how much money Tesla has at its disposal. And they don't apparently understand that the growth rate for EVs, even though it's going to come down a little bit because of subsidies going away, the cost of the cars is coming down by about the same amount. So does it matter if the car is just cheaper? Would you rather just have the car cheaper than have the subsidy? Elon Musk used the subsidies to be able to sell his cars for more money, and then lo and behold, the subsidies go away, and hey guys, I'm gonna lower the price on the cars. And so the bears go, oh, no margins, no margins. No, that's not true. The technology got better. The production methodology got better. The manufacturing is better. It's cheaper. They've worked their way through a lot of the kinks. Still has kinks. What Tesla is doing, and people need to understand this, hasn't been done in 100 years. And they're doing it. They're already at 2% of market share from 0. That's not a big deal. Bullshit, it's a big deal. From 0 to 2% of global market share, and one of the only companies on the planet that has growth in the car sector, it's a big deal. And they are way ahead of everybody else. BMW's kind of closing in, you know, and I've driven the BMW. It's a fun car, but the Tesla's better. Will that always be the case? I don't know. But Tesla is an iconic thing already. There are 70% of the people on this planet, or in the United States, it's way higher around the world. 70% of the people in the United States believe that climate change is man-made, right? That's a real number. Now, of those people, how many are going to put their money where their mouth is? I'll tell you what. I hang out with a lot of millennials, and what do they tell me? I'd sure like to buy a Tesla. You know what? A lot of my exer friends are like, you know what? I'm going to go buy that Tesla. I can afford the $70,000 car. Why would I go buy a BMW when I can buy a Tesla? Right? I got my truck, and I'll have my Tesla. It's the way I'm thinking about it. I'm going to buy my new 4Runner. Hopefully it'll be a hybrid. And then I'm going to buy a Tesla. I want a Model S. Model S is a hot car. I like a little bit more size. Otherwise, I do the Model 3. Right? And there's a lot of people like that. I don't know how many, but I know it's millions. So Tesla's just going to keep growing, especially as they get away from being the absolute most expensive luxury car, and as their mass market car gets to market. You know, the Model 3 at $35,000 legitimately now, compared to a Camry at $30,000, you know, a hybrid Camry at $31,000, what are you buying? I don't know. I think an awful lot of people are buying that Tesla for $4,000 because you know what the salesman says over the telephone or on the internet? Hey, the payment's only about $30 more a month. Wouldn't you rather have the Tesla? Pretty hot car. Bet it gets you laid. Just like the iPhone got you laid years ago. They did a study on that too. People get more sex when they have an iPhone. I don't know why. We're weird. People are dumb. People buy into status. It's coming. Tesla is coming. In any case, going back to Larry Ellison, I want to talk about the psychology that Ellison brings to Tesla. He is a dirty, dirty fighter. He just is. Everybody knows it. And he's got Elon Musk there who is trying to figure out how to be a dirty fighter. Because Elon Musk is angry. And I'll tell you what, he's smarter than 99% of the people on the planet. So you got a super smart guy that's angry and he's trying to change the world? See what he just did with SpaceX? Just had 3 jumbo rockets take satellites out into space for Saudi Arabia and landed them standing up. Or in the water, I don't know what the hell they did. Well, it was a success. I didn't read the whole article. I think they landed them standing up. I don't know if it was like the grasshopper or not. But the point is all these guys that are chanting, Tesla's going bankrupt, and their sales are going to fall off a cliff, and they're going to run out of money. Man, it just doesn't make any sense. Tesla doesn't have $100 billion of obligations that if the stock market drops, pension obligations, that the stock market drops are going to put, you know, Ford and GM $30 billion underwater. Right? GM and Ford are more likely to go bankrupt than Tesla. Now, I don't think they will. I mean, they won't liquidate for sure. I mean, they might have to reorganize, but they're more likely to go down than Tesla. They have falling sales, all kinds of real estate that nobody wants, right? All kinds of pension obligations, other debt, and cars nobody wants. That's kind of a big deal. So, why is Ford getting rid of all their sedans? Why is GM closing a Cruise plant that had a popular car? It's because there was no pricing power. They couldn't raise the price on the Cruise. Why? Because then people are buying a Hyundai instead. Tesla's got this all set up. The next couple of years are going to be choppy for them. They're going to have to dilute. The share price is going to come down. How far is it going to come down? I don't know. I do encourage you to go read this article. The link is in the chat room, and I will put it in the comments. And we'll see what's going to happen. So yeah, somebody's saying in the chat room that Tesla is suspending sales of a $35,000 Model 3. Yeah, whatever, for a couple months. Who cares? The fact is that the price is coming down double-digit percentages every year for the next several years. And when they switch to the new batteries, when I talk about that in here, I don't want to say it out loud. Go read the article, right? When they switch to the new batteries from that Arizona company, the one that made the New York Times. Oh boy, right? When they go from the lithium batteries to the other battery, right? So everybody's like, oh, Panasonic is dumping on them. No, Tesla is getting rid of Panasonic. Why? Because they don't need them. Cutthroat. Everything that Musk has done has worked. Granted, it's been along the edges. It's been difficult to see. But then when the next move comes, you go, oh my. So if they're cutting their deal down with Panasonic, what does that mean? It means they're going to ramp up a deal with somebody else when the ebb comes back into the sales market, when EVs take off, which is going to happen in the 2020s because of legal changes and because oil is going to hit this more expensive plateau in that $70, $80, maybe $90 range, right in there somewhere. So people are going to start saying, okay, I can get an electric vehicle for $2,000 to $10,000 more than I can get an ICE vehicle. $30 a month, $40 a month. I think I'd rather have the EV. That is what's going to happen. It's just like what happened with the iPhone, right? People could have bought other phones, but no, the iPhone's the second best-selling phone on the planet, and they have margins. Why? Because the people that want it, want it. They're not price sensitive. So if they can get 10 to 15% of global market share, which I believe they will get, I believe they'll be in the top 3 or 4 for market share within a decade, maybe within 5 or 6 years, 7 years, right? Think about that. GM is at 17%, Toyota's at about 15%, Ford's at about 14%. Toyota's holding steady. GM and Ford are losing market share. Volkswagen is coming, right? They're fixing their company. BMW, BMW is not in there for cheap cars. But what if they bring a 3 Series to market that's, $39,000? 3 Series EV. Think about it. It's coming. Technology's getting better. We saw semiconductor prices come down. We saw computer prices come down. Cell phones should come down now that we're basically having extended replacement cycles and the technology's, not transformational anymore. Now it's more incremental, right? So once technology improvement gets to be incremental, prices start to come down. The transformational changes in cell phones, I think, are pretty much done, unless they start firing out holograms and lasers or something. But it's really just coming down to 5G is going to be the next growth driver for cell phones because they'll be faster and they'll be even more supercomputerish. But you're still just holding it in your hand and browsing the web, and maybe you're going to turn your heat on and off at home, and maybe instead of scheduling it on Nest, you're going to hook it into your phone or something, and start your car from a mile away. I don't know. I mean, the phones will do more, but it's still just incremental. So in any case, read this article. You'll find out the mystery metal that I talked about earlier, and I'm gonna have a lot more to say about this. I'm gonna rip on the shorts and Seeking Alpha because they just drive me nuts. They're wrong. They don't understand how the business works. Growth wins. Ford and GM and most of the other legacy car companies have worse balance sheets. Oh, and by the way, Tesla just cut a deal with Fiat Chrysler in Europe. Look it up, right? They pooled with their cars with Fiat Chryslers, and Fiat Chrysler is going to pay them billions of dollars over time. I forget what the number was. I take that back, not billions. I think it was like 500 million. Between 3 and 500 million, depending on sales. Tesla is going to get from Fiat Chrysler for what? Do you know for what? For nothing. Just by letting them use the EVs that Tesla sells to meet government pollution levels that they have to bring it down to. How's that? They just got paid, or they're getting paid. So take a look at that. Now, where do I think Tesla stock price is going? Well, let's talk about that in the new Fundamental Trends Rare chat room. So here's the price of Tesla, 2 boxes with a line in it. Tesla is getting down to their first support levels right now. I don't want to buy here, okay? When we made the trade, when we bought down here the first time and we sold out up here, it's the only article I've ever written for the public on Tesla, is I wrote the article up here to sell. Now Tesla's down here, and I'm still not saying buy, because I think that this area here, there are a lot of support levels it can break through. I think Tesla can get down to about this line, right around $200 a share, and it could get in here for a moment, right? For a minute, it could get in here. But these are the huge support levels. And so for sure, I'm a buyer down here in this green area. So this chart is over at Fundamental Trends, and I'll fire it up at Margin of Safety Investing today. I'm going to work this afternoon and tomorrow morning. It might be by tomorrow morning. We'll see. I'm going to take an old man nap because I only got a few hours of sleep last night. I'm not sure why. This cold keeps coming back. But I won't be in a big hurry to buy it. It didn't rebound like we thought it might off the car numbers. You know, right? Bought a couple calls just in case there was a zip. There's no zip. So I think might be a little jitterbug in here, and I could rise, but I think probably it gets into this zone for sure. And as it gets towards this line around $200 a share, I get very excited. And if it does get a sell-off that's market-induced or hate-induced or whatever, gets down towards 160, 150, 140, I'm buying calls at that point, right? I'm just buying leaps. So how do we know that that's what's probably happening? Take a look at the money flow. When people tell me that Tesla doesn't have money, money flow just kept going up for years, right? Up and down and up and down, but virtually never a negative number. It's got a negative number right now since December. So then on balance, money flow is turning over. How low can it go? Well, look, pretty big money down here, right? Every time people come in down here. So this rally, maybe not so real, right? Maybe it was supposed to jitterbug around for a while longer. If it comes all the way back, and what I'm saying is true, which is they're going to switch battery technology, they're going to keep bringing their costs down, price of oil is going to stabilize way higher than $45 a barrel, you know, 70 plus, right? Just ask yourself the question, if the price of a Tesla is about the same price as a Camry, which is, you know, cheaper than the non-existent Chevy, what are you going to buy? Cars are going EV. And if they go EV, most people will buy a Tesla, at least in the near future. So we get through some rockiness. I think you see some big gains for Tesla in the 2020s. I believe they'll be a top 4, maybe top 3 auto manufacturer within a decade. That's a big deal to grow from 2 to 12%. But they went from 0 to 2. That's an infinite growth number. So It'll keep going. And as good as a GM, as a CEO, as GM and CEO Barra is, she's great. I think she's a superstar. But she's got a huge ship to turn. And she's fighting our president right now. So what do? Borrow money? It's hard for GM and Ford to borrow money, right? The banks are giving them some money. They're throwing $8 billion a year into the development of EVs to catch up to Tesla. Tesla's, you know, it hasn't spent that much money. And they're already there. Think about how far behind GM and Ford are. Just think about it. They're not going to introduce a car next year or the year after because they said they're not. But they're going to introduce cars in 2021, 2022. So that's a few years down the road. By then, even more people have Teslas, even more word of mouth. Tesla doesn't have the dealerships all over the place. And that's good because everybody's buying online now. I heard some people say, I'd never buy a car online. I want to go test drive it. So what? Go test drive it. There's stores around. There's not going to be very many stores around. So you want to schedule a test drive of a Tesla? You can do it. You just might not have a dealership on the corner. But you know what? I used to own an insurance agency. I sold it. And then I opened an online insurance agency and I sold it. Do you know why? Because door-to-door insurance sales doesn't happen very often anymore. You know, Allstate's going online, right? And so I closed the one agency, sold my book of business, a bunch of healthcare policies back around 2002, 2, right in there. And then I opened an online insurance agency. Why? Because I knew it was all going online. And then I get all sorts, you know, I was copying Select Quotes and Matrix Direct. And then all of a sudden, other insurance agencies said, hey, can we buy your online website? Give you $30,000 for the website. And do you have any business to sell? And I kept the business because I liked the clients that I had. I sold some other business, and I sold the online website. They shut it down. They just made their own. They just wanted me out of the way. And now you have the really big companies that are getting in on the same thing. It's going to happen in cars too. If in old school insurance, the biggest building downtown, is going to go online, do you really think cars aren't going to go online? They're not going to keep 500 cars on a lot anymore. They're going to keep 15 cars on a lot now. That's how it's going. So one of the biggest car dealerships where I live closed, whatever it was, 5, 6, 7 years ago. It's a big storage facility now. All these storage facilities everywhere. You know, George Carlin was right. We just keep buying stuff. I'm trying to be a little bit more minimalistic, although I'm not real minimalistic. But man, have you guys noticed that there's storage facilities freaking everywhere? Everywhere. I got a buddy who does the storage war thing. He finds some cool stuff. He found a box of money once. You know, I don't understand that whole trend. Why do we keep buying stuff that we're never going to use and then storing it and then forgetting about it and letting storage wars guys get it? You know, whatever. Anyway, Tesla, buy it in here. Don't buy it in here. Not much margin of safety up here. Lots of margin of safety down there. Easy. All right. Let's figure out trading options, right? This is one of the things that in the rare chat I link to. Don't you dare trade options until you read this. So this is over at Fundamental Trends now. Copied it on over there. There you go. All right. I'm going to release next week 3 discount codes, and I'm going to put them on Twitter first. So if you don't follow me on Twitter, go ahead and do that. And I'm going to release 3 discount codes for Fundamental Trends. Once I have the website completely released next week, probably by Wednesday afternoon next week. The site is from beta to alpha, or alpha to beta, or whatever it's going from. It's going to be fully functional next Wednesday afternoon, maybe before that, but I'll announce it Wednesday afternoon. And I'm going to have a discount, 50% off a bunch of the services that we have over at Fundamental Trends. 401k alert people are signing up for, and I'm giving them discount retroactively, and this is only half done, but it'll be done by the weekend after. So, you know, it's going to be a pretty neat site. It's very, very, very interesting. The forums basically acting as a research library, so 148 different companies and ETFs, but mainly companies that we have research reports on. That's going to be pretty nifty. So anyway, okay, let's fire out some questions and call it a day. Yeah, the chat room here, if you notice, that's the test chat. This goes live next week, right? We have the placeholder chat, and then we have what it's going to become. Where'd it go? It's going to become. Good grief! Where'd it go? Oh, I switched away from it, didn't I? Right. So it's switching to this. So you won't see this stuff until next week. But there's going to be 5 different areas: stock swing trades, sector swing trades, global swing trades, right? Hedging. So I had some fun with this. Stocks. Oh, they put in different pictures. I got to switch the pictures back. Sectors. Oh, man, they changed my pictures. I'll fix these. Oh, that one's right. But sectors was blueberry pie with slices out of it. I thought that was kind of funny. And then stocks was, that was the Enterprise because I'm Captain Kirk, right? Yeah, I'm Captain Kirk, the new one, the better looking one. And then hedging, I had a picture of a bear. And then mumbo jumbo, right, is whatever you want to talk about, right? You talk about poker, baseball, gardening, politics if you're nice, black holes. Did you see the black hole this week? Ooh, pretty cool. Yes, just keep it funny, nice, keep it maybe funny. Yeah, right. First rule, be nice, be light and respectful. So that'll be up next week, okay? Thoughts on Dow and DuPont? Not right now. Right? Not right now. What range would I sell Pioneer? So I was having this talk with a big oil investor recently, like 2 days ago. Yeah, Wednesday. And I think that there's going to be an awful lot more purchases of oil companies in the next year or two. Shell and Exxon and Royal and Chevron, Royal, Shell, BP, Exxon, they've all talked about wanting to buy more inventory in the Permian. I think these companies are all going to get a bid. As their earnings continue to get better, and they are, Pioneer is I don't know if they want to, but they're the perfect acquisition target. Devon Energy is a great acquisition target. And Kana is an amazing acquisition target. Some of Chesapeake Energy's assets are great, and they're for sure going to sell 1 or 2 of them. So the companies we're in, it's not just because I think that there's going to be sustainable oil profits for at least several more years, but it's because the majors, again, are tightening control on the industry again, right? Like they did, the control they had in the 70s, 80s, and 90s, right? Oil is going back to being more oligopoly, and they can talk about OPEC all they want. No, OPEC is Saudi Arabia, so it doesn't matter if they actually have a group. They can tell everybody there to pump as much as they want, and frankly, I think that's coming because why on earth would anybody in the Middle East not pump at capacity? Their oil is cheaper. Why would they let other oil, the deep water oil in particular, get on the market? Unless you think that I'm really confused because I'm talking about EVs, but I'm also talking about oil, it's just the transitional nature. And I'll tell you what, as much of an environmentalist as I am, I understand that if we would build one more freaking pipeline to Canada, we wouldn't ever have to deal with the Middle East again. And that's a reality. If we could replace, 6 million barrels? No. It's not even 1.6 million barrels. It's not a lot of oil. mean, we need just a little bit more heavy sour crude. We really don't need Middle Eastern oil anymore. We're a pipeline away, Keystone. Figure out a way to not ruin the water and stop leaking and build parallel to something so that it's not a new route. I don't understand why we can't get one more pipeline done. I understand that it's a political hot potato, but you know, if we don't want to deal with the Middle East, one last pipeline to Canada. They're our neighbors. It's good for both of us. We can figure out a way to keep it from dripping, I would think. Any case, that is all I have. REITs, they're fairly overvalued, right? Yeah. Well, Anadarko, yeah, interesting story there, right? I haven't read up all on it yet, but yeah, there's going to be more buyouts like that. So, is the Anadarko deal done? APC. I always get them an Apache symbol mixed up. Oh yeah, today. All right. Yeah, this is what we're going to see. You're going to see this move for a whole bunch of the oil companies that are in our Dirty Dozen, right? If you haven't read Dirty Dozen, I don't even know if I have it on this website yet. I have some more updating to do. Here. Oil Dirty Dozen Spano. There you go. There you go. There you go. The Dirty Dozen oil stocks. Oh, I must have a link to the article. So, you know, follow me on Seeking Alpha. I know most of you do. I haven't read an article for them in a month. I'm going to fire out 4 or 5 next week. There you go. These companies are all going to get the same sort of bid that happened to Anadarko. All of them. I think all of them. Most of them. I shouldn't say all of them. Most of them. These companies are all buyout targets. Every single one of them. Even EOG. I don't own EOG. But even them. But the pure plays in the Permian, Centennial, Parsley, Concho, Pioneer, the very Permian heavy companies, Occidental, Devon, and Kana, they're going to get bought. Or they're going to merge and just become bigger factors in the oligopoly, right? Then Occidental has the really good carbon control business. So there you go. All right. Have a great weekend. Hopefully it's warmer by you than it is by me. Winter just won't leave Wisconsin. So I think I'm going to travel more in the winters going forward. I've had enough of this weather. All right, everybody take it easy. I have another grandmother turning 90 in a week. 2 grandmas 90. Can you believe it? Took one to take one to bridge almost every Thursday. And she lost $1.25 this week. She wasn't very happy about it. And I'm learning how to play bridge. So pretty interesting stuff. Have a great weekend, everybody.